If you want to have success in real estate, you need to not get distracted by every asset class and focus on a repeatable business model. One of the things that I made a mistake with when I first started was getting distracted by all different types of projects and jumping in too early before I truly understood them. And if you don't want to lose a ton of money or waste a bunch of time, you cannot get distracted by a bunch of different asset classes. You have to do things that you understand. I'm Meg, and I'm a real estate developer and investor, and I've round tripped hundreds of millions of dollars in projects and learned many lessons along the way. And if I would do it all over again, I would have focused on one asset class. Where I've been the most successful in real estate investment is in the Airbnb asset class. And when I look back, I actually started Airbnb out my own apartment in 2012, and I fully understood how to Airbnb something out, how much money I could make, how I could, list the property, because it was something I lived and breathed for many years before I tried scaling it. And where I made mistakes was getting into asset classes I didn't understand. So when I first moved to Nashville, I tried to basically flip high-end homes like I did in California. And the mistake that I made there was that I didn't do enough research to see how the markets were so much different. In California, a 5,000 square foot house would be $10 million in the neighborhoods I was building in. In Nashville, a 5,000 square foot house would be $1 million and sell every year. It just was a totally different market. And so what happened is I tried to apply things I had learned from my previous life, but I didn't do enough research and kind of jumped into an asset class I didn't understand once I had moved to Nashville. So in looking back, it's basically just about like really doing your research. But if I had gone back now and was going to be investing in real estate, I would have really leaned into this Airbnb asset class, because that is actually where I've made the most money over the years. And I was really onto something that was emerging. Every single investor out there tells you that, you get started by buying a single family home and renting it out, and then you buy another one and refi it. And that's sort of this model that's been spouted out by a million different gurus over the years. And then, when you do enough homes, you build a portfolio and you get into apartments, there's nothing unique about that business model. And it's fine if that's what you want to do and that's what you live and breathe and are passionate about. But to me, that's not super exciting. I always saw that and just saw every single person doing it, every single training seminar, every single guru selling, investing in apartments and single family homes. And to me, that wasn't exciting. I really needed to focus on where I've ended up being the most successful is on something that wasn't emerging. So for me, that was the Airbnb space, because it's something that has evolved over the years and I understood it ahead of time. And that is how I've been able to scale out. It can be whatever asset class you're comfortable with, and fine if it's apartments, but what is going to be the thing that makes you unique about what you can offer the market, and really lean into that and scale it. If I would have been not so anxious to get started or not so easily distracted, I would have done enough unemotional research about a market to know that the demand just wasn't there for high-end homes at the time. I just was too early, and that's always been my problem. I've always been a little bit early. That was a good thing on the Airbnb trend, but at the time with high-end homes in Nashville, it just was, you could have seen that there were only a few homes that traded over $2 million at that time. Now it's a different story. As I said, I was early, but at that time I had several homes that were over $2 million and they just took forever to sell. And I did not account for that in my underwriting. I think jumping into something you don't fully understand without doing enough research is a big problem. I think another thing is, it's hilarious to me that, I started out, my very first real estate venture was an Airbnb in 2012 when I rented out my own apartment. And now 15 years later, I build, huge $100 million projects that are the same thing. And it's what I knew the best and what I fully understood that I leaned into. But I would have saved a lot of time and heartache and money not getting distracted by, high-end homes. And I also did, an office building. Didn't mean I wasn't successful at these things, but had I because I push through and I make sure to be successful at things. But had I just focused on the one thing that I knew I had an upper hand with and that I understood, I would have been a lot farther along, probably, to the tune of over $1 billion worth of, the condo Airbnb development that I'm focusing in on now. Whatever you're going to be investing in or what your thing is, I mean, I can't tell you what that is. It's what you know and where you see the trend being, and that's what separates you and to make you a really good investor, a really good entrepreneur versus just anyone else who's going to just put their money in the stock market. But I think the key is making sure that for me, I was really good at Airbnb in 2012, and I should have just kind of realized that I understood institutional investment at a younger age and something like Airbnb and could have married those and made a lot of money on it, as I have. But had I only been doing that, it would have been exponentially bigger by now. The problem is it was a bull market and there was so much money out there chasing multifamily and industrial and things that, pension funds want to invest in. And what happens is those asset classes get flooded. And when there's so much money chasing all the same thing, it's really hard to differentiate between supply and you end up with an oversupply issue. And so those markets to me aren't as safe as something that you can lean into that's your own niche that you fully understand and scale. And really just do that over and over and over again, as opposed to just trying to do, a million different types of things. Because even though there are basic lessons in real estate, like collecting rent and property management and operating expenses and, basic concepts, every asset class has its own idiosyncrasies. And if you are in a niche asset class, like, I know developers that just only build warehouses that are refrigerated for cold storage, like that's a very niche asset class. If you're specialized in that, I promise you're making more than the people that are just broadly investing in a huge, massive asset class like multifamily or industrial, unless you've been, on the forefront of that asset class for a very, very long time. I think that you find your niche by trying to solve a problem that you have, that you fully understand. Maybe your background, that reflects on where you grew up or what your parents did or, your first jobs. I think if you want to make a career out of investing, it's really important to look at a market and just see what's missing. Real estate's very localized. So in your neighborhood, if you're wanting to flip homes, what kind of homes are in demand that aren't being supplied? I mean, affordability is a huge thing right now. Just creating really nice smaller format homes where someone could buy for less than 300 grand would probably do really well. Something I'm super passionate about. Unfortunately, I'm not getting distracted anymore, but I could go off on a whole career path of really trying to solve the affordability problem in America by, making a tiny home that you could actually live in as a primary residence. I mean, that's something that's super interesting to me. But again, like, anything that you see is a problem that, talking to agents, talking to brokers, really trying to get, understand from them, what do they hear that their clients want that someone isn't building? That's a really great way. But like I said, real estate is very localized. So when you get started, you have to look in your market and see what's missing. One thing I would have also done differently that I learned is that I really would have been a broker. If you want to be on the residential side, that's a residential broker, or you want to be on the commercial side, being a commercial broker, just exposes you to a lot of different deal flow and a lot of different ways. And you're working with a lot of people and a lot of different investors. And it's a way to see transactions done without making the mistake of buying something yourself that you don't have enough exposure to. So that is one thing I really would have done. I really would have been a commercial real estate broker to get more exposure to deal flow, financial underwriting, see how people, buy the right deals and then invest. I think that's a really prudent way to kind of learn a market. I've spoken to so many investors that either invest based on the person they're investing with, which is a very valid tactic. Like, it doesn't matter if you have the best deal in the world. If it's with someone that you can't trust or that you don't know, it's just not worth the heartache. I mean, there's, the legal process is not perfectly efficient, and you really have to do business with people you trust. That's one of the first precursors is when you're getting involved in something, really looking at the personalities involved. And I know people that have written $25 million checks because they just trusted a person. And that could be enough because they have a track record. So I think who you're investing with is an extremely important aspect of it. The other part of doing your research is just not getting emotional about the real estate. A lot of people invest in real estate for the wrong reasons. They like how it looks, or it's some prized asset or something. A lot of really, really high end hotels, as an example, don't actually make a lot of money. It's more just um, I see investors wanting to flaunt that it's a trophy asset or it's a big family's asset that they've had for hundreds of years. And they say, oh, I own this, fancy hotel in downtown New York or something. It doesn't mean that's a good investment. And so I think it's about not getting emotional about the real estate and being able to separate out what you think is a good idea versus what the research is telling you. And it's very basic in real estate. The research is your comps. So what is something renting for? What is something selling for? You can always pull that very easily online and see if what you're underwriting is a good investment, and just allow plenty of contingency. I don't want to have regrets and say that I've done hundreds of millions of projects over the years, and I'm really happy for everything I learned and knowing so many different types of real estate and doing so many different types of real estate. But I think for me, when this last period of the capital market slowing down starting in 22, I really just had time to jump off the hamster wheel and reflect and look at all the things that I had done and how they'd panned out and go, wow, it's really funny because I ended up, out of the 12 projects I did, the most successful were this specialized asset class in Airbnb that I started. And that is what I understood the most, and that I had the most skill set and differentiated me from other investors and other product types. And that really made me special. And it just kind of took me, having exposure to all these different distractions to realize that's the one thing I would have done, is just really leaned into what I knew the best and what I could offer that was different from what other people were offering. I can build a beautiful multifamily building, and I have, but a lot of people do that, and a lot of people invest in that. And so now you're in a market where there's so many multifamily buildings out there that there's rents that can't be achieved. And so the entire commercial market's been distressed for several years. And it's just a matter of going, okay, well, that wasn't a unique skill set that I had that I should have leaned into in the beginning. So that's what I learned after a decade of real estate investing. And if you want to hear more about how I walked away from an actual deal, watch this next video.